This is Gerardo Del Real live from the 2023 Beaver Creek Precious Metal Summit. Joining me today is the CEO of Aldebaran Resources, Mr. John Black. John, it's great to have you here. It's great to catch up in person. How are you?
Great, Gerardo. It's a fun time to be in the copper business.
Let's get into why it's a fun time to be in the copper business. We talked a bit off air, and you mentioned the fact that there's definitely an uptick in interest for quality copper plays. I'm imagining quality copper plays with scale.
Absolutely. Although it is a little bit interesting right now because we see almost two audiences. With the type of projects that we have in Aldebaran and our sister company, we're getting a lot of interaction from the major copper companies doing their due diligence, monitoring what we're doing, evaluating, and in some cases, like South 32, investing in us to move forward. And so we get a lot of positive feedback. We see that they're very much looking for the next projects in the future. They see what's coming with copper. But the investing public is a little hesitant right now. There's a lot of money that's sitting on the sidelines. I think everybody agrees with the premise that copper will be a great place to be. They're waiting for it to happen. So it's like a coiled spring right now with a lot of money parked, and they want to see it happen before it takes off. So I think the coming year will be very interesting for us.
I say it to everybody, friends, family, subscribers, the easiest way to make money is to get ahead of the herd, right? Be a contrarian, catch a big trend early before everyone else does. And in copper, it's clear as day to me that the future is much, much higher copper prices. You happen to have the good fortune of having not only a large scalable copper asset, but it's got a phenomenal gold kicker, and you also happen to be cashed up due to the recent investment. Can we talk about the resource base and the capital position? Because it's an enviable one right now.
Absolutely, yeah. We have a publicly announced resource of about 1.4 billion tons of 0.5 copper equivalents, dominantly copper with a pretty good gold kick to it, as you mentioned. But our recent work over the last year has indicated that we probably have only defined a portion of that deposit yet. So over the course of the last year, we've announced a lot of long holes into mineralization below where we previously reported mineralization. We have about one more year of full drilling to be able to fully delineate the size of the deposit. And quite fortunately, we are cashed up, which is unusual in this junior space right now. It's very difficult to do private placements at the moment, almost impossible in many ways. So what we've been fortunate is that we have strategic backers that are providing our funding to go forward. So we're just completing a $20 million financing. We just upsized it in the last week or so. And that's based primarily on South 32 continuing to support us, increasing their position from 9.9 to 14.8% equity interest in the project, and our principal shareholder, Route 1, maintaining their interest at the same time, as well as some new money coming into the story right now. So that support is fantastic. We're sitting on about $25 million in the treasury, which will allow us to have a very aggressive drill campaign in the coming year. Keep in mind, our field seasons are opposite.
Right.
So we're just clearing the roads right now to get into our camp to begin our drilling program in October of this year. So that'll be kicking off an aggressive program that allow us to define the full size of the resource and be in position to put out the first PEA. And coincidentally, it will also be the spend required for us to earn into an 80% interest in the project. So with the funding that we have right now allows us to accomplish 3 major milestones in the next 16 months.
Are you seeing the major mining companies and the major shareholders positioning, not just in your case, which obviously is the case, but in general, positioning strategically for an oncoming rush of M&A? Because that's kind of what I see in the cards in the copper space.
Absolutely.
Yes.
Yeah, you'll see most of the major copper projects that are out there, companies coming in, and it's an interesting dance.
Yeah.
Because we love to have the technical support and confirmation of the project, but you don't want to let a group get too many hooks into you. So we're careful on how we structure these so that the party can come in and provide us support, provide us the funds that we need to advance the project, but maintain the possibility that we have other interested parties as well. So it's something you have to be a little cautious, but it's been a great source of funding. Keep in mind, they typically come in at an over market placement. So it's at a premium to our share price with no warrant attached. So by doing that, we're being cautious and looking out for our current shareholders that are avoiding dilution. So it's a win-win for us.
Absolutely. And for shareholders, you mentioned $25 million in the treasury, you mentioned drilling, you mentioned the resource. Obviously, a lot of boxes checked there. You have a history of monetizing assets in South America, that part of the world, right? You've done it multiple times. You've monetized assets for over $500 million in the past. And you believe, and you've told me this publicly, that this project is in a lot of ways better than some of those other assets that you've sold off in the past for multiples of today's market cap at Aldebaran.
Absolutely. And we couldn't be more fortunate to be sitting on a project like this. I think we're really at the leading cusp of this. What we've seen is, I've mentioned that the major companies are very interested in monitoring us closely.
Right.
To date, the M&A activity is focused on acquiring producing assets.
Right.
And that's primarily because it's instant production to the buyer.
Sure.
And also, some of the producers are at low prices right now. And the other producers know that those prices will go up as copper prices go up. So they're picking those off where they can and consolidating, in many cases consolidating districts. That's typical pattern for the leading edge of M&A.
Right.
When that's done, then we'll start to see people moving into acquiring opportunities to go to production or develop projects, and that's the space we're in. And there aren't too many of us that have the assets that the big guys look for. Once they start disappearing, there's a scarcity factor that enters in, and we hope we kind of get into perfect storm type conditions. To do that, one of the key components is a higher copper price. It's not required for our projects to be profitable.
Sure.
But what happens is when we have a higher copper price, the producers are cashed up, and they switch from focusing on dividend and return to shareholders to growth. And they look to acquire assets and moving forward, and then it gets into that competition phase. And I personally think that's about a year or two out, and that's about the time we need to fully reveal the value of what we have. So I love the timing right now.
Where's the market cap? Because this is the opportunity, right?
Right now we're sitting about 125 million market cap Canadian.
With 25 million backed by cash.
Yeah. And that puts the valuation of the project at less than a penny a pound in the ground right now. And we've typically seen these things acquired for more in the 4-cent range historically. So it varies on a lot of different conditions that are out there, but we like the opportunity to increase value of what we already have just by de-risking the project and moving it towards a PEA. But keep in mind, I think in the next year you'll see us grow the size of it quite a bit too.
Love it. John, always a pleasure. Thank you, sir.
Thank you. Thank you.